I mean, if you look at all of the various factors going on, and I'll focus on Bitcoin, Ethereum, maybe the range is a little bit lower, but whatever, whether it's 1900 or 1800. But if you look at Bitcoin, effectively what you've seen is a very obvious result of long-term holders increasingly, and it seems like every month we get a new all-time high in percentage of long-term holders. You also are seeing the hash rate in the Bitcoin network at an all-time high. Last month, there was a panic that caused Bitcoin to drop below the trading range, which is more or less somewhere in the 27 to, very low 30s range that we poked back into post FTX and were at last summer before, the multiple cataclysms of forced selling when lenders defaulted. But basically, you're seeing the hash rate at an all-time high. And last month, we had a freak out because of the ordinals issue and transaction costs started, really spiked. But those are starting to normalize now, and the network is starting to absorb the effect, which is what free markets do. When demand goes up in a spike, prices go up, sure, and then things normalize. That's why the hash rate's increasing. So the fact is the Bitcoin network is alive and well. At the same time, holders are at an all-time high. At the same time, Bitcoin on exchanges to be sold is pretty close to a low. Volumes on exchanges are also bumping along the low side, which tells you that speculators are kind of, moving into pricing and moving out, but the long-term buyers seem pretty happy to buy in this below 27 range and cushion any downdraft. So it feels like we're in the bottom of trading range to me.